Hello, and welcome to Doch na 10 Investment. This analysis is for Intuit on Nasdaq as of 31st of July 2026 with a share price of $316. The full report is on donatien.ca. Intuit has fallen roughly 62% from its peak and is now genuinely cheap for its quality, which is why the medium and long calls are both buy. But the short-term call is hold. The monthly and weekly trends are still down. The daily reclaim came on thin volume, and there is no confirmed entry. So the near-term stance is a hold now, a buy to accumulate on weakness for the medium and long term. The quality here is real. Intuit runs an 81% gross margin, throws off about $6 billion of free cash flow a year, and carries a net neutral balance sheet. QuickBooks is deeply embedded in small business workflows because switching away means replumbing a whole company's books. On valuation, the shares trade at about 19.3 times clean GAAP earnings against a warranted multiple of 23.6, a ratio of 0.82 that sits in the attractive band on roughly a 7% free cash flow yield. Stress it the other way and it only gets cheaper. On forward non-GAAP, the stock is about 13.3 times this year's guide and 11.5 times next. So why not buy today? Timing is the weak pillar, and the reason the short call is a hold. The monthly and weekly trends are still down after a roughly 62% peak-to-trough collapse, and price sits far below its 200-day average near 468. The daily has turned constructive and reclaimed the 50-day line, but on only about 1.08 times volume, below the 1.5 times confirmation bar, and the next earnings print sits beyond the window. The fundamental case is met and the stock is cheap, but without technical or catalyst confirmation, the timing score is 46 and the short horizon is capped to hold. By the confirmation, a daily close over about 336 on heavier volume, or a tested higher low of 290 to 300. The D rating is a competitive story, not a balance sheet one, and it is two-sided. QuickBooks and the wider Global Business Solutions unit are still gaining share where it matters most, roughly 70% of the growth, with QBO accounting up 22% and GBS up 15%. The live pressure sits at the consumer tax layer. TurboTax revenue grew 7%, but volumes are contracting against IRS direct file and free AI tax tools, and MailChimp is losing ground to Klaviyo. Because that single AI driver is a genuine coin flip between existential threat and secular tailwind, the driver score is 54, above the 50 that keeps the case open, but below the 65 that would amplify it. The driver is the reason to own it and the reason to size it at half. The risks are competitive and they are live, not a distant tail. The bear case sees the stock fall to about $250, roughly 21% below spot, at a 20% probability, and it is the thesis invalidation scenario. IRS direct file and free AI visibly erode TurboTax volumes and pricing. AI bookkeeping agents commoditize the QuickBooks data entry Intuit monetizes, and consolidated growth decelerates to high single digits with the multiple stuck near 10 times. On top of that, near-term timing is weak. The late August print carries a restructuring charge and a cautious street skew after TD Cowen's downgrade, and the whole cheap for quality case rests on the QuickBooks and GBS core holding double digits. Watch QBO accounting growth and TurboTax volumes. Now, weigh the risk against the reward. The bull case is roughly 58% above today, the base case, the most likely, about 27%, and the bear case a fall of about 21%. So you are risking about 21 to make 58. So I'll call on Intuit, on Nasdaq, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.